Okay, so today we're going to start off with share capital and capital maintenance, right? Why do you think this is important for us as a company? What is the reason?
So we can fund the company, like if we don't have enough money, then we can just give it out as shares.
Correct.
And other people can buy it.
Yes, exactly. So what the reason why we are very interested about this is a way of funding the company. It's a source of finance, right? This source of finance generally is it's stated it's more expensive than debt. Okay, debt is what we get when we like kind of, for example, loan, right, from the bank. It is proven that this kind of debt is cheaper than equity finance, right? Why do you think they say that? Any reasons?
Can you repeat the question? I don't get the question.
Yeah. So the question is, do you think our debt finance, that is getting a loan, is cheaper than getting equity? Equity is shares.
I don't think so.
Well, debt finance is cheaper, you know why? Because it attracts, so we have to pay interest, right? That payment of interest is tax deductible. Okay, and it goes into our profit and loss as an operating expense, and it is tax deductible. That's the reason why it is cheaper than that of equity, because equity finance, you need to pay dividends, right, which is going to be more expensive. So because it's not tax deductible, right? So in effect, we state that debt finance is cheaper than that of equity. Now, getting back to our share capital, now you very clearly stated, which is correct, it's shares are actually used to fund a company, right? And these shares, we have different types of shares, isn't it? Yeah. So, and also the people who buy these shares, what do they call them?
Shareholders.
They're the owners or members, right? We call them registered members. A member of a company is a person who's registered to be a member and whose name has been entered into the register of members, right? This means the company keeps a register of members, right? Imagine it's a company and I want that company is owned by so many people, right? Thousands of people. So what they do is keep a register, and in these days it will be an online thing. The information will be, you know, entered in online form, right? It's everything is maybe in an application. Okay, so that it's easier for us, and information of the owners or members of a company is readily available. Is that clear? Right? So
Yep.
it is very important for the company to have that, because imagine at any point in time the company needs to know who the owners are, right? Let's say even if it's a property, if a property is owned by more than 5, 6, 15 people, it doesn't matter, but we need to find out who the owners of the property is, okay? Because then we are able, from a shares perspective, these owners have shares, right, of the company. So then the owner is able to trade these shares or sell these shares whenever he or she wants it. Okay, so what is this subscriber of shares? What does this mean?
Means you buy shares.
Yes, other persons may acquire shares and become members by applying. So what they mean is they apply for these allotted shares. Allotted means shares have been allocated, and these shares need to be transferred to them, right? Applying as a personal representative, that means I'm representing myself or on behalf of a deceased member or a bankrupt member. Okay, so sorry,
I don't understand that.
right, bankrupt member is a deceased member. Do you understand that? A person who's dead.
That I understood.
Yeah.
Bankrupt member.
Bankrupt is a person who has gone, he or she is not able to pay his debts, right? And in the States, in other countries, they will say, well, I'm filing for bankruptcy. That means I do not have money, and as a result, I will not be able to make any payments to anybody, right? They state that. Okay, so this is what a bankrupt member is. And a trustee is a person who looks after the interest of these members, whether they are deceased members or bankrupt members, right? That's what it is. Now, ceasing to be a member, what does that mean?
Sorry?
The 1.3, ceasing to be a member. At what point, how does he cease to become a member of a company?
Ceasing as in?
That means the person is no longer a member of the company, right? The first is when he or she becomes a member of the company, right? First thing is you become a member of the company, you become a member because the shares are allocated to you, correct? Now you want to transfer the shares to another member, a new member, okay? Or you're selling the shares, so you cease to become a member. The meaning of cease is you are no longer a member. Okay, if the member dies,
Shares.
sorry,
Because they sold the shares, that's why you're
correct,
not a member.
correct, right? The person dies, so obviously now he's no longer a member. Okay, a person who's dead can't be a member. Shares of a bankrupt member are registered in the name of his trustee. So a person who goes into bankruptcy, if the person holds shares, it will go to a trustee. Okay, a minor, that is a person who is underage. Okay, so you have given they have given a different scenarios where the person can cease or no longer become a member. Okay, is that clear?
Yep.
Right. Now, the number of members. A public and private company must have a minimum of one member. Okay, so at least one member has to be there. And there is no maximum number. Okay. Public and private company must have minimum one member. Where a company has a sole member, the following rules apply. Sole member means one member. Register of members must contain statement that there is only one member. So in the register, it is clearly stated that we have only one member. The quorum, the act automatically permits the quorum of one member. So obviously, if there is only one person who is a member, the quorum is also one person. Correct? Is that understood?
Yeah, it's one person, yeah.
Right, clear. Now we go into the shares, nature of share capital. Okay. Share is a transferable form of property. That means let's say I've purchased shares from a company. I can transfer these shares to you, okay, at a later date or on the same date, right? So this is kind of a property that I can transfer. Okay. Now, a share is an interest of a shareholder in the company. So why would you buy shares? Because you're expecting a return. Okay. Now, you have shown interest in the company and you invested in this company. There will be many others who is invested in this company as well. Okay. Now, one of the things that you can do is, for next time, I think I have asked you to do this before our next class, I want you to really go into the stock exchange, look at one of the companies that's there, talk to me about this company, right? Talk to me about the different types of shares that the company has. Okay, it's important because through that's the only way that you'll get more understanding. Okay, have you ever thought of investing in shares?
My dad did it, not me, but it's kind of competitive in the market.
Sorry, I can't hear you.
The market is very competitive, so I'm kind of scared to invest.
Right. I mean, you don't have to. Since your dad is investing, you can follow that investment as well. His portfolio, right? Portfolio is a number of shares that's there in somebody has. So that's why I say it's a portfolio of shares. So you can look at his portfolio, ask him where he's invested, in which companies, why he invested in those companies, what's the reason behind it. Okay, because it's important that we go through a practical scenario, otherwise it becomes very difficult for you to understand. Shares must be paid for. The nominal value of share fixes this liability, and it is the base price of a share. It gives a proportionate entitlement to dividends. It is form of a bargain or mutual covenant between shareholder which underlines such principle as majority control and minority protection. Now, what does this all mean? It is a share will have a particular value, right? It's a nominal value. So nominal value of a share could be $1, $5, $10. Okay. If you buy shares, you're entitled to dividends, okay, as well as votes, okay, and return on capital if that is so. Is that
as
clear?
Well as
as well as any return of capital, right?
So the point previous to that.
This one.
He said some reward or something, no?
So what we're saying is, if you, so the first point, the share has a nominal value, correct? The nominal value can be $1, $5, $10.
Yeah, that I got it.
That you got it. Now, that shares, when you buy a particular share, you may buy one share or you may buy 1,000 shares. Okay?
Yeah.
It entitles you to a dividend. Okay? Dividends is when you know what dividends is, correct?
Yeah.
Okay. And also, there are some votes attached to each of these shares as well.
Yeah, the votes that you learned.
Yeah, we spoke about the votes as well. And there might be at times a return of capital or interest that's entitled. But now it depends on your articles of association. It will state very clearly what a member or shareholder is entitled to. Okay.
Okay. What's the difference between dividends and interest?
Right. Dividends is when the company makes a profit, the directors may decide to give a dividends. Dividends is a kind of a return to the shareholders, and the return is given from the profit they've made, right?
Yeah, okay.
In this case, return of capital or a particular interest, right? Again, this may be specified in your articles of association where they say, I will give you 5% of interest on this particular capital, right? Or 8%. So that's a different story. Dividends, it is the company may give you dividends or may not. But when it comes to an interest, they may state very clearly, every year I'm going to give you this type of interest, right? Now, a very important term in the next one, the key term is this, okay, where it says your nominal value, if it's, let's say, $5, okay, that means it's a face value of this particular share, okay. However, you cannot issue it below the nominal value, but you can issue shares below the market price. Let's say your market price for this share is $50, okay. You can issue shares at $30, okay. But if my nominal value of the share is 10 and I'm thinking of issuing at 8, I cannot do that. Is that clear?
It's because it's less than the actual value, that's why you can't do it.
Correct. Yeah. Yeah. Now, in this case, what they're saying is a share is a form of personal property carrying rights and obligations. Rights are the right to receive dividends, the right to receive interest, okay, right to vote, and obligations as well. Right? Sometimes there are obligations from that particular shareholder. It is by its nature transferable. That means I can sell my shares to someone else or transfer the shares. A member who holds one or more shares is a shareholder. However, some companies, the companies that are held by limited by guarantees, right, they don't have a share capital. So some companies don't have a share capital, therefore there are no shareholders, right? Quite straightforward. Right, let's go to the next one. Is that clear for you?
Yep.
Okay. Information about any special rights. Now this is where you can see that certain shares carry special rights, okay, and this is very clearly stated in your articles. Now otherwise there is no document which can document all these special rights, and how would others know about this? Okay, so they have the articles of association which will state these are the rights of different types of shares, okay. A resolution or agreement incidental to the creation of new class of shares should be there, okay. So you may have different classes of shares, and a statement of capital also will be there, which needs to be documented, okay. So all what it's saying is a company has issued shares, different types of shares, which attracts different rights, okay, and obligations. All that should be documented and kept in the register where it is visible and accessible to anyone. Why would I say that? Why should it be available to anyone?
So they can see it?
Yeah, because it's a public company, right? So
Yeah.
anyone should be able to access this information and see what type of shares there is, because they may be interested in different types of shares, okay, and they want to see how and where they want to invest, okay. Now we go into different types of shares. Tell me what authorized share capital is, Kanika. I think we discussed this. Let's see what you understood. What is an authorized share capital?
I forgot, but I just want to know the meaning of authorized. As if, is it just given to the person?
Right. So what it is when you started off the company, you said, I'm going to have 10 million or 100 millions of shares, right? These shares have a value of a nominal value, I would say, of, $20. Okay. Of this 100 million shares authorized, this is my authorized share capital, I've issued and allotted only so much. I've issued only 100,000 shares, right? So of the 100 million, I've only issued 100,000. That means I have got money for 100,000 shares. Okay, is that clear?
Yeah, that's good.
Right. Now the next one is called up and paid up capital. What does that mean? Called up share capital is the amount which a company has required shareholders to pay now or in the future on the shares issued. They have issued the shares, and then I'm going to call up and say, right, shareholders, come and pay me, right? Paid up share capital is the amount which shareholders have actually paid. So what this is I have issued shares to you, right? I have issued shares to you. I have issued you 50, let's say 50 shares. And I'm telling you, okay, I need you to pay for 50 shares. And that is my called up share capital. I'm asking you, give me 50 shares, okay? Money for 50 shares. That's the called up capital. But then you pay for 30. So that means that's a paid up capital, share capital. There's still 20 remaining. Correct? That is called the called up share capital. So all what we're trying to do here is to separate and see, I have issued 100,000. Of the 100,000, how much is called up? That means still remaining to be paid. How much has been paid? Okay, this is what I want to find out. Okay.
What about the shares which you have not paid for? What are those shares called?
So they are still, if I have issued shares, what you're saying is I have issued, of the issued share capital, certain part of it has not been paid. Is that what you're saying?
Yeah.
Right.
Yeah.
That is called up because I'm calling for that shares. Right. I'm calling for them to pay me.
Oh, okay.
Okay.
Oh, okay.
Right. So let us go to the next one. Loan capital. Now there is another one, loan capital, that comprises of debentures and other long-term loans to business. Right. It's called debentures and it has nothing to do with shares. Okay. Now you know what market value is. Market value is I'm selling the share for $10 to you. And right, initial public offering, the company is issuing shares to you at $10, but tomorrow it goes into the market, and the market it might be $60. Okay, so the market value is quite a lot. So between 10 and 60, what is that? You have made a profit. Okay, now let us go into types of shares. We have different types of shares, isn't it? We've got ordinary shares, okay, and then we have class rights, preference shares, okay. So preference shares and ordinary shares. Now those are the key terms that we need to know, okay.
Class rights are like rights in different classes of shares.
Correct.
Like the rights for every class. Oh, okay.
Yes. So different classes, that's what it is. I can differentiate my shares and say these shares attract this kind of rights, these other shares attract these other rights. Okay, why do I do something like that?
So that you can get the benefit of the share you bought.
Yeah, so
You want that
what we
kind of
can
share?
do is, I mean, different shareholders, different investors have different profiles. Okay, each one of them might be interested in different things. What an ordinary shareholder wants is, he's supposed to get dividends, but it is not guaranteed. Okay, it's not guaranteed at all. However, in a preference shareholders, they would state, as a preference shareholder, this is, I'm going to guarantee you X amount of dividend. If I'm a sort of investor who's looking for that certainty, I will go for the preference shares. So it depends on investor to investor. In order to cater to different investor classes, right, categories, the companies also have come up with different types of shares. Yeah, that's what it is. I'm matching the shares, the different types of shares, to the different types of people and their interest. Okay, any questions? So one of the really good benefits for an ordinary shareholder is, at the time of liquidation, they get all the profits, right? The liquidation is, I'm winding up a company, I'm selling off everything. The preference shareholders, okay, we're paying them what they've invested, that amount will pay them off, but all the rest of the profit is with the ordinary shareholder. Now, what is class rights?
It's the different rights every class shareholder has.
Okay,
I'm guessing.
so these are different rights. Okay, so certain shareholders, certain shares may have dividends, the right to dividends. Certain may not. Certain will have voting rights. Okay, so they will also say, okay, I'm going to give him voting rights, but also I'm not going to give him return on capital, right? There will be certain shares where you will have the right or power to vote on removing or appointing directors. Okay, so these are some of the things, kind of privileges, or what we give the investors for investing in our company, right? So preference shares and ordinary shares are the most common ones, right? Class rights may be attached to a class of shares by the articles. That means if I'm linking some share with a different type of class, right, the rights of that class, I have to do it through the articles of association. Okay, through a special resolution and a general meeting, I have to get this passed by shareholder agreement and then document it in the articles.
Do preference shareholders, they have different classes also?
Correct. Yes.
Oh, okay. Got it.
Okay.
Yeah.
Now, owning a share does not entitle the shareholders to participate in the management of the company. What does that mean?
As an registered shareholder and you're not a part of the management of the company.
Correct.
Obviously, you can't be a part of the management.
Correct.
Not an employee.
Correct. Yes. But an employee may get shares, right? May receive shares, or they might be able to buy shares as well. Okay.
Yeah.
That is possibility. Now we look at preference shareholders. Okay, preference shares are shares carrying one or more rights, right? The rights we have discussed, dividends, return on capital, voting, all these things, right? The preference shares may have one or more rights attached to that particular share. Okay, they have prior right to receive an annual dividend of a fixed amount. So what this means is, first you need to give priority to preference shareholders. If there's a dividend, in this case, you first give the dividend to preference shareholders, and only thereafter that you will give it to your ordinary shareholders. Now, you might have made a huge profit. Company would have made a huge profit, and they're planning on declaring a massive dividend, right? However, the preference shareholders will only get what they were entitled to, that is a 6%, and the rest of it is uncapped. Okay, uncapped amount that will go into the ordinary shareholders, right? So in this case, it advantageous to be in an ordinary shareholder, right? However,
Yeah, that I got. I remember that.
yeah, certain shareholders may not want this kind of fluctuation. They say, right, give me 6% every year, I don't mind, just give me that. Okay, as regards to priority dividend entitlement, there are 4 points you need to be aware of. Okay, so what are the 4 points? So the first one, what does that mean? Tell that to me in your words. How do you interpret that?
Just explain the first point.
Right. That is we're saying prior to anybody, these guys are going to get the dividend. Correct? Second point, what does that mean?
I know I'm saying cumulative. I think last time also I was saying cumulative. Like it adds on. How does it add on? Like, can I understand that?
So, right. Now, I have to give you 6%.
Yeah.
Okay. I'm not able to give you that 6% for whatever reason, right? I don't have enough money. Okay. So I can't give you the 6%. However, for the next year, so if I'm not able to give it to you this year, it gets added on for next year, right? It doesn't mean to say, well, I couldn't do it this year, so forget about it. Forget about the money that I have to give you. I will give you the next year. It doesn't work like that. I have to add on what I have given you the first year when I'm paying you for the second year.
So it covers everything. So it becomes
correct. Yeah. Then what about the third one?
Wasn't it liquidation preference? If a company which has arrears of unpaid cumulative preference, it means that they don't pay the preference dividends, and all of those dividends are accumulated because the person didn't get it because they couldn't pay it. Basically, it's added on, like say, like the 12% which they still can't pay, it will keep on increasing. Dividends go into liquidation. How do they go into liquidation? Okay.
So what happened in the first situation is where the dividend has been declared. Okay, it was declared, but then they go into liquidation prior to paying it. Okay, so that's what happened, and in this case they're entitled to a dividend. They're entitled because they have to, the company has to pay this as a priority. Okay, so this means dividend has been, because it has been declared, okay, before they went into liquidation. In the second situation, it is the articles expressly provide that in liquidation, arrears need to be paid in priority to return of capital to members. So what it means is before you give your capital back to the members at the time of liquidation, you need to pay the dividends to the members.
Oh, so
Yeah?
the dividend comes first before the capital?
Correct. Yes.
Okay, got that.
Now the last one is we're saying holders of preference have no entitlement to participate in any additional dividend over and above the specified rate. We spoke about this. We said, well, these guys are not going to get anything more, even though we have liquidated the assets and we are doing, it's a really good return we got on that. But the preference shareholders will not get part of it. Is that clear?
Oh, yeah, got
Yeah.
that.
Okay.
Yeah.
Now, priority right, they have, I think this is a repetition a little bit. The advantages and disadvantages. So what do you think the advantages are in this case? What do you think?
I'm just reading.
Advantages of preference shares. What do you think? You can read it and tell it to me in your own words.
Then obviously they'll get the money when the company gains some profit because they're preference shareholders. That's obvious. So I'm just stuck with the drawbacks. Drawbacks.
Yeah.
Well, the drawback that they only get limited amount. They don't get everything when the company is really in have high profits.
Yeah.
Is that drawback?
Yeah. Correct. Yeah.
Okay.
1 second. So the thing is, but as a preference shareholder, you are stating you want a regular return. I don't want fluctuation returns, right? I'm saying I want a regular return, and that may be the kind of investor that you are. Okay, you might be in a state of life that you say, well, I don't want to be taking risk. Okay, I just want only regular return. Doesn't matter if it's going to be skyrocketing the returns. I don't want that. I just want a regular return, whether it's 6%, 10%, doesn't matter, right? So that's the type of person. So in order to kind of match the investors' needs, the company also comes up with different share options, right? Now we talk about variation of class rights, right? What does that mean?
Is it the last sentence you told that the company is a different class types of shares for preference shareholders?
So in this case, what
that like they have different rights based on the type of investor?
Yeah, correct.
Same.
So here what we're saying is you need to pass a special resolution, right, with 3/4 of the votes, right? With 3/4 of the votes, you get them, right? And you link it to the separate class meeting or by written consent, right? You have a special meeting and then have written consent. Okay, so when there is a variation of class rights, you have to do a lot of things here, because first you attract the shareholder saying, okay, this particular share has got this number of rights. But if you're changing the class rights, right, what you need to do is get into a separate class meeting, right, pass a special resolution, but in order to be effective, you need to get 3/4 of the vote. Does that make sense? Does it make sense?
They have made it. Have they made it?
Sorry?
Like the rule, or is it like this is how it goes?
No, so this is what...
This thing you're saying, a 3/4 majority.
Yes, yeah. So this is as per the company law, right? It is as per the company law.
Okay.
Yeah, yeah. So what it says is, well, these guys, it makes sense, right? You have invested in this company and they have attracted you to that company, saying that these shares have these type of different share and the rights to these shares. And if the company later on, after 3 years, 5 years or 10 years, want to change certain things, right, of the class rights, you need to have a majority number of people agreeing with this, isn't it? Right? So you need to have 3/4 of people agreeing with it.
Oh, okay.
Right?
So this is just when they need a change in the rules.
Yes. Say for example,
as in the law is not...
Sorry, go on.
It's okay. The law is not benefiting for them. That's why they want to change it. Then they need
for some reason, maybe some taxation reason, things change, right? So then in the environment, the things change. So in order to facilitate this and to make things better for the shareholders, the for whatever reason, these guys, the directors, may think of changing. But for the change to happen, it's not easy, right? 3/4 of the people need to agree for this change, and it is through a special resolution that this needs to be done. Okay. All right. Okay. When variation rules apply, it is not a variation of class rights to issue shares to new members, to subdivide shares to another class, or return capital to preference shareholders, or to create new class of preference shareholders. So these situations, there are about 4 or 5 situations, they're saying these are not variations to class rights, right? Issuing shares to new members is not a variation. Subdividing of shares of another class is not, right? Return on capital to preference shareholders is not a variation, or to create new class of preference shares, right? So they have given an example here to kind of for us to get to grips with what is actually variation in class. Okay. So it's the same thing that they're emphasizing. And then we go into special situation. To deal with unusual special situations which in the past caused some difficulty, the following rules apply. If the class rights are set by the articles and they provide a variation procedure, the procedure must be followed for variation, right? So all what it's saying is, if in the articles they're very clearly given what needs to be done when you're having a variation, you need to follow that, right? Even if it is more difficult than the statutory procedure. Okay. If class rights are defined otherwise than by the articles, then there is no variation in procedure, right? If you have defined the class rights somewhere else in some other document other than articles, then you're not obliged as a company to go through this variation procedure. Okay. Now minor.
In the first one, it says less onerous, as in it should be difficult, like how you just said. That no matter how difficult, that's the meaning of it.
Correct. Onerous is that. Yeah. Okay. Now minority appeals to the court of unfair prejudice. What does this mean? Dissenting minority holding of 15% or more of its shares may apply to the court within 21 days of consent to have the variation cancelled. What does this all mean? Now you have got 2/3, right? No, 3/4, right, of people agreeing to go ahead with this variation. However, there is 15% of shareholders or more who do not agree. Okay, they say, no, I'm not interested in this. However, for them, what they have to do is they should come up and apply for this 21 days, right? Within 21 days. Okay.
You should file a case within
Correct. Yeah.
Okay.
This is what it means. Okay, this whole thing. Now, redeemable shares, treasury shares, and deferred shares. What are redeemable shares? What do you think there?
Like you don't want the shares and you redeem the cash value of it? Is that?
So what it is these particular shares, even though you have issued them, the company can buy back these shares, right? So the company has the option to buy back these shares. Okay, that's what redeemable shares are.
Oh, okay. Oh, no, not all companies redeem their shares.
Correct.
Oh, at least some.
Now, treasury shares. Treasury shares, these are created when a public limited company whose shares are listed on the stock exchange legitimately purchase its own shares but out of distributions profit, right? Treasury shares are they are actually purchasing shares from the profits. Up to 10% of its shares can be held in treasury, which means a company can reissue them without the usual formalities. Now, I can generally, when a company has to issue shares, they have to go through the formalities, right? These treasury shares are where you keep 10% of these shares, and these shares I can sell them off, right? Sell them whenever I want, okay? And it's not a problem, and I don't have to go through the normal formalities. However, they can only be shared for cash, and the company cannot exercise the voting rights which is attached to them. So they can only be shared, only be sold for cash, and there's no voting rights. Okay, so there are few characteristics of these treasury shares. What are they?
These treasury shares are basically like they are purchased with the company's profit. That's why they're called treasury shares.
Correct. And what else?
Oh, means the 10% of what the shares they bought, they can reissue it under their name, thinking that their share. It's not that they bought it and they're reselling it.
Correct.
Which is actually the case.
Yeah. So what we're saying is I'm buying the shares. They're not redeemable shares. Okay, they're not redeemable shares. I'm buying shares on the stock exchange. But then I'm gonna keep 10% of it. I can keep it and reissue them without any unusual formalities.
Yeah, because they're the companies, that's why.
Right, because if I have to issue shares, generally I have to go through a lot of regulations, right?
Yeah.
Deferred shares are linked to management of founder shares and it is rarely used. Holders of deferred shares are not entitled to a dividend until the fixed or preference shares of certain amount percentage is paid on ordinary shares. Okay. We also said the treasury shares we have to sell it for cash and it does not attract any voting rights. Now deferred shares are also initial shares, right? And it says are not entitled to a dividend, okay, until the fixed dividend or preference shares and a certain amount of percentage is paid on ordinary shares. Okay, so there are 3 different types of shares.
I don't understand deferred shares.
You don't understand the deferred shares? Okay.
No.
The type of share is also known, so management of founder shares. We very rarely the company uses this, right? This kind of shares. Now,
Like what are the shares?
this
Like,
dividend, it's maybe it's actually linked to the founder, right?
Does he buy
So
it or is it his?
sorry, I can't hear you.
He buys it or is it his?
So basically, maybe we have given it to them, guy, right? A founder is given maybe X amount of shares, right? For all he's done, I mean, you don't have to pay money to get shares, right? So for some reason you got like X amount of dividend, X amount of shares. However, it's not entitled to dividend until everybody else gets paid, right? As with other types of shares, what they're saying is the rights of these shares is there in your articles of association.
Oh, okay, got it.
Okay, is it clear now?
Yeah.
Right. Now, we will finish 3.8 and we'll close this class because from 4 onwards is we will keep it for the next class, right? Statement of capital. What does the statement of capital contain? It will say these are the different types of shares that we got, yeah, and these are the kind of rights associated with each different class of shares. Okay, so it gives the person who is reading a fair view. Okay, in one page I can understand what types of shares the company has issued, how much money it has received from this issued shares, how much is outstanding, okay, what are the rights of different classes of shares. Okay, so I have got a very clear view of my whole of this particular company's shares and how it is structured. Okay, this is what a statement of capital gives. Is that clear?
Yeah.
Right. Now, I want you today to look at a company. Okay. You can look at, I wanted you to look at Marks and Spencer, I remember last time. Okay. Can you look at Marks and Spencer and we can talk about Marks and Spencer the next time?
As in the shares, I should just check the shares and what should I do?
What I want you to do is to look at the annual report.
Annual report, okay.
Marks and Spencer. Okay.
Okay. And basically,
I want you to download the Marks and Spencer annual report, then discuss with me the next time the different types of shares that they've got. Okay. All right. So we'll close for today and we'll meet again. How was the class today? Do you understand everything?
Yeah, I understand everything.
It's clear?
Yeah.
Okay, so try and do some of the questions that I have sent you as well.
Yeah, there are multiple choice ones.
Okay, all right.
Okay.
Okay then, good night.
Okay, good night. Take care.
Bye.
Bye bye.